where we are seeing direct market reaction, of course, in the oil market. Brent and WTI adding to Friday's 3% gains. John Defterios joins us now on this. John, great to have you with us. Earlier on the show, I compared this to the 14% rise that we saw in oil prices in light of the attacks on Saudi oil facilities back in September of last year. It feels mooted to me here, muted. What do you make of what we're seeing right now in the oil markets, and why?
Well, you make a very interesting point because, as you know, most investors are risk adverse and the red lights are flashing, especially if you're sitting in the Middle East right now. I spoke to a senior source at a state oil company. He said it's uncharted territory and that the terrain is very complex. And I would add, I think investors are being very complacent, Julia. We have a 5% gain between Friday and Monday, and we're knocking on the door of $70 a barrel, which, by the way, is a 9-month high, even after that Aramco attack. But this is a very different market. Before the Aramco attack, the market was lower because there was worries about oversupplies. This shock from Donald Trump and the attack against Soleimani hit when we had a market that was climbing. Remember, at the early December meeting of OPEC, they decided to cut production to 1.7 million barrels a day. So we've been on the staircase even higher, and then this shock to the market. We could go much higher because it is a very complex situation. What do I mean by that? We don't know what Iran's going to do next. They're very crafty. Does it target U.S. embassies in the region? Could it go after U.S. jetliners, which wouldn't be the first time flying here in the Middle East? Or they extend it to the proxies, their allies here in the region, Saudi Arabia, the UAE, Bahrain, for example? Do they go after energy infrastructure? That's why I think this march up to $70 a barrel, it is significant, a 5% gain, but it could be much worse because we sit in a region that sits on top of 2/3 of the proven oil reserves around the world.
Yeah, when we think about tackling or targeting energy infrastructure, I go back to what I mentioned earlier with Saudi Aramco, and to your point, is it no surprise today that we see immediate price pressure on Saudi Aramco? I believe it's trading now at the lowest level that we've seen since it IPO'd.
Yeah, again, a very clear point you're making here, Julia. You would think that higher prices means higher revenues. That's the case for Saudi Aramco. But the sell-off that we see here has all to do with the resilience of Aramco going forward. We had the September 14th attacks that we talked about. Would Iran try to test Aramco again? That's a huge question mark that nobody has an answer for. Some of the other state oil companies that are aligned with the United States, do they get tested? Then I think we cannot ignore the fact that the Strait of Hormuz comes back into play again. Anytime Iran's had a problem in the international markets or with sanctions, it does threaten to cause havoc within the strait. That would be to tankers. Don't forget, over the last 9 months, we saw attacks against pipelines in Saudi Arabia, tankers south of the Strait of Hormuz, even airports in southern Saudi Arabia. It could happen again, and that's why sources I'm speaking to today say, I'm surprised at the market reaction in Asia, Europe, and the United States. Here in the Middle East, it's a very different feeling overall.